All right, well, let's get on to our top talker because a lot of folks are keeping a wary eye on this. Another U.S. bank has gone under. This morning, federal regulators announced that First Republic Bank was seized and that JPMorgan Chase will buy a bulk of its assets and deposits.
Yeah, First Republic had just over $229 billion in total assets. This following a 40% drop in deposits in the first quarter of this year. Many customers moved their funds to larger and safer banks, this following the collapse of Silicon Valley banks and Signature banks. So panic ensued. Elizabeth Scheiderer is here now with Sequoia Financial Group. I want her to break it down in the simplest possible terms. So a lot of times people hear news like this and they say, well, I have no idea what that means. In lay terms, what happened?
Yeah, and so what had happened here is different than what happened with Silicon Valley Bank, where we all kind of woke up one morning and the bank was under.
Yeah.
This has been more of a telegraphed issue where we knew that First Republic Bank was having issues, and so FDIC came out and said, we need bids. This bank needs help. And so they were actively soliciting bids, and we know JPMorgan Chase got that bid today.
This is a slight departure from the way things have happened in the past, correct?
Well, exactly. And if everyone looks at their 401k today or their investments, we're not going to see much movement in the market today because of how telegraphed this was.
Right.
So it's a nice difference. The markets knew this was coming, and we had kind of an organized approach to finding a new home.
Yeah.
Okay, so you said that this one was kind of in the works, that they saw that this was going to be an issue. So that's really the main difference between this particular seizure and Silicon Bank, which came out of nowhere.
Well, came a lot quicker,
Okay.
right? And so in this situation, FDIC said, we're going to need to find a home for this bank and for these depositors, and JPMorgan came here. And what's nice is JPMorgan shares actually did well today. I mean, there's hope that this is a good purchase for that firm, and all the depositors at First Republic Bank have access to their funds.
It's basically letting the competition take care of this instead of a federal takeover or something like that. And you mentioned the market reaction was pretty muted. I guess this was already baked into the number, but what did you take from the market's reaction today? Just about everything was flat.
Everything was just about flat, and one of the things we've been talking about is that the risk of contagion may not be there, given the fact how well this was handled and the way the markets recovered. Hopefully this is a great sign that we learned from Silicon Valley Bank, and we're moving forward.
So the deposits, you know, the people who have their money in that First Republic Bank, they still have their money. It's just they go to a Chase bank now.
Exactly. Those branches now become Chase branches, and that's where they'll go.
One of the things that's been really kind of focused on with all of these different banks is the shareholders of the banks. Those folks could be out in this.
Correct. Yeah. First Republic banks are now halted from trading, and likely of getting any money back if you're a stockholder is very, very, very low.
That's just stunning.
It is. It really is. Elizabeth, thank you very much. We appreciate it. Later in the show, in just a little bit, in fact, we're going to talk about this new policy, this lending policy, where folks with higher credit scores will actually be paying more, while folks with lower credit scores will be paying less for home mortgages. Is that even legal? We'll find out. There's going to be a lot of challenges to that, but that's coming up. Elizabeth, again, thank you.
Of course.